Okay, another question and answer from the last market outlook. This one I'm going to start a little bit differently. I'm going to start at the very, very bottom with a comment, a rather rude comment. In the video, I was going through some of the executive orders, and one of the executive orders was that no government official or office would push any social media company into censoring or labeling anything as misinformation or disinformation any longer. And I agreed with that, because what passes as misinformation or disinformation today is somebody who has no expertise in anything hearing words that don't agree with the words in their head, and they think, I don't want to hear these words, and accuse you of being misinformed and spreading misinformation. That was the point of the comment that I made, and I made the point of saying, for instance, the CIA now is believing that the Wuhan virus, let's call it COVID-19, it was in fact more likely than not a lab leak. And then this guy, who I'm pretty sure is not a biological researcher, is not a virologist, is not in the intelligence community, has earned no right to be in that particular lane, has decided, I don't know why, to determine who should be in that lane. Mark, keep your comments on markets and economics. When you get into politics like misinformation and lab leak stuff, you come off as laughably uninformed. You're good in your own lane. Stay there, risk looking like a fool. Well, let's see if we can't tear this down. There are other comments. There's a whole bunch of replies. A couple backing this guy up, and then somebody pointing out later on that all the accounts backing him up were created minutes ago. So it's really the same person. Somebody said you had deleted a comment as well. I didn't delete any comment. There was I put the link down for the New York Times article and called them a name at the same time. You can go look at the comments. But if we're looking for somebody who is misinformed, let's just click on the replies here, and we'll just scroll down. I noticed that Ukulele, look how socially brave this guy is, hiding behind a fake name and no picture. Meanwhile, my name is right up there. Responded to your comment pointing out why the CIA assessment is irrelevant. It is not irrelevant. Let's go through what the CIA information was. They declassified some documents. The CIA said it is more likely than not. I'll write that down. More likely than not. And at the same time, they said low conviction. Low conviction. That does not mean irrelevant. And that does not mean low belief. They have a very high belief that it was more likely than not that it came from a lab rather than an animal. So what is this low conviction stuff? It is related to the type of evidence that you have. So if you are uninformed, you would think low conviction means irrelevant. There are three types of evidence: inculpatory evidence, exculpatory evidence, and circumstantial evidence. Inculpatory evidence is evidence that you did it. It's a smoking gun, it's an eyewitness, it's fingerprints, DNA, you're placed at the scene of the crime. There is very high conviction in our suspicion that you did it. We have inculpatory evidence. Exculpatory evidence is evidence that you did not do it. So we have evidence that clearly points that it could not have happened, or you could not have done the crime, or you were out of the country at the time, or somebody came forward and got and admitted to it. Whatever the case is, there is some evidence in which we can get rid of the accusation. And then there is circumstantial evidence, which is all you have left if you have no inculpatory evidence or exculpatory evidence. In other words, I cannot prove that you did it, but I cannot disprove that you did it. However, given the circumstances, I know it was you. I just can't prove it. I know it was you. That's what the CIA was saying. We know it's this. That it came from an animal? No, it's more likely that it came from a lab leak. However, we have low conviction because we have no inculpatory evidence. No exculpatory evidence exists, only circumstantial evidence. So it is possible that you could have a situation where there are 1, 2, 3, 4 possibilities, and the convictions don't have to add up to 100%. They could all be low. They could all be low, but that you know that one of them is true. One of them is true, but you're lacking the inculpatory evidence. The circumstantial evidence is damning. The lab is in Wuhan. The virus started in Wuhan. The virus was a coronavirus. This was a coronavirus. It was the same virus in the same city. Not only that, this lab was working on gain-of-function research. This came into the population with 2 tricks already. Already had gain-of-function. That is circumstantial evidence. You say, oh, it started here, but hang on a second. There is a lab in Wuhan that was working on that virus with gain-of-function, and this one already had gain-of-function. Yeah, it's probably the lab, but we don't have an eyewitness. We don't have a whistleblower. We don't have evidence to prove it, but we know it is. We're high. We suspect that it's that, and we feel pretty good about our suspicion, but we have low conviction. So think about it from a lawyer's perspective. If you were accused of a crime and they have no inculpatory evidence, but nothing that exonerates you, just circumstantial evidence, any lawyer will take that case and say, we got this. It's all circumstantial. We got this. It is not on you to prove you didn't do it. It's on the other side to prove you did, and they have no smoking gun. They can't place you at the scene of the crime. They have nothing. The prosecution can probably look at the case and go, this is our guy. This is our guy. We're not looking for anybody else. This is our guy, but we can't prove it. We don't know where the gun is or the knife is. We don't know. We don't have an eyewitness. We have no DNA at the scene of the crime, but we know this is our guy. That's what the CIA is saying. They weren't saying that it's irrelevant. They were talking about the type of evidence and placing low conviction on the evidence. With that in mind, your comment pointing out why the CIA assessment is irrelevant. No one was pointing out. If anyone said it was irrelevant, it's because they didn't understand this. So let's go back up to this guy over here, and let's think about this. You come off as laughably uninformed. The story, the information was declassified. Story was run in the New York Times. It was in either Barron's or Wall Street Journal, I forget, and even on Bloomberg. They knew what it meant. I don't know if you want to revisit who was uninformed. But this was the point I was making, is that aren't we all just tired of this kind of thing? Some yahoo with no experience that has not earned the right to be in a particular lane, standing on their tiptoes at the side of the highway, yelling across a couple of lanes for you to stay in your lane. They haven't even earned the right to be in that lane. Do you know who gets to say, stay in your own lane? Somebody who has earned the right to be in that lane. Somebody who has the gravitas. Somebody who comes heavy. Not some adolescent with a stupid screen name hiding behind a fake picture. There is bravery in anonymity. But this is just social cowardice. We have all, for everyone listening, we have all had enough of people who have not earned the right to be in any particular lane, telling other people not to be in that lane simply because they're hearing words that don't agree with the words in their head. We've had just about enough of it. Now, if this were somebody who came in heavy, you know what they would say? I disagree with you, and here's why. Here's why you're wrong. They wouldn't say you come off as laughably uninformed. I think we all know who is laughably uninformed now, right? All right, that's out of the way. If you ever disagree with me, say it. I disagree with you, and tell me why. But if you're just going to insult me, if you're going to talk like that, I will tear you down. So let's begin. Let's see. We'll start at the beginning here. Just to clarify, 4455, these data sets are used to evaluate the model. That is correct. That is why we had that chart at the very beginning showing its performance against all of the others against that. Not to train the model. That is correct. These data sets are benchmarks that are commonly used to compare performance across different language models. Yes. Currently studying CFA all levels. Not taking any tests. Ooh, that's bold. Just doing because my passion for financial independence and growth. But all in all, your content is helping me understand markets and understand analytics. Excellent. 4705. Oh boy, was it talked about on CNBC. And Bloomberg. He's referring to Deepseek at the end of the video. I segued into Deepseek, which was got a little bit of press last week, but hardly any reaction in the market. And I'm not an expert on these things, so I just thought, well, it seems odd that there wasn't any reaction, no one talking about it. But all day long on Bloomberg, nothing but that. I had to turn it off because it's like, okay, I'm Deepseeked out. It was a little too much, but I'm surprised it took that long. In the end of your end of year video, looking at 2025 trends, your number one conviction was volatility in most assets. Yeah, and we are seeing that. Would it be fair to have an allocation of pure Vega plays to capitalize on this? A pure Vega play. I don't know that I would want a pure Vega play, but I would certainly be incorporating it into my option strategies at this point. GM had great earnings today and then took a dump. They opened up at, after earnings, they jumped up to like 58, 58.50, and then all the way down to 49.50. On heightened implied volatility. So I sold some puts. I normally don't want to touch it, but I sold some puts. I think it is pretty clear. Trump watches markets. That's his scorecard. He had to have seen that. He had to be aware that GM was dropping like that. So he has to be aware that the damage he would cause to an American legend, a company that's been around for over 100 years, run by Alfred Sloan, right? MIT, Sloan School of Business. I think Sloan School of Business is MIT. To take down an American icon, to the state he won, Michigan, to hurt the UAW, to hurt GM, to hurt the markets. I don't know that he would do that, although he is vindictive. Mary Barra didn't endorse him, so maybe he feels the need to hurt them a bit. But Trump is transactional, so he's I'm sure in his mind he's probably thinking, okay, I'm going to hurt Canada with this. What are they going to give me? And if I do this, it'll hurt GM. What will GM give me? What will the union give me? And I think GM could go a long way by probably making a donation to the Republican Party, or endorsing saying they'll endorse some candidate in the midterm elections. They could go a long way by doing that. But to get to the point, heightened volatility, you're going to see it everywhere. I'm going to take advantage of it. What podcasts do you follow? Not a lot. I watched the All In for a while on Friday. It lands Friday night, and I'm usually in the gym Friday night, so I have it on. And then when I'm done, I come up, have a tea, and I watch Bill Maher. But lately, it's not that interesting. Marcus Academy is really good. Sometimes they have just killer presentations. It's all academics that show up there. Some high-level practitioners, but mostly academics. But really interesting stuff. So I watch that. And then there's a number of ones that I watch. The Compound I watch. I like Josh Brown's interviewing style. I think I don't always enjoy the guests because some of them just want to show chart after chart after chart and all their lines on charts. But the way he gets them to talk about something more, just his interviewing style is really good. When he had Cliff Asness on, really great interview on that. So I do watch that. If I'll watch it for the first 5 or 10. If it's a chartist, I'm done. If it's like just another technical analyst, I'm done. And they tend to have too many of those. And then it's whatever shows up in my feed. Sometimes I bounce around. Sometimes it's stuff I've never heard of before. I like Doomberg. I like that one. Doomberg is good. So I listen to Doomberg. But it's mostly, if you're particular about what you listen to, after a while the algorithm figures it out and it feeds you stuff along those lines that you might never have heard of before. Deepseek reference aged very well. Too well. Too well, yeah. Although I disagree with you about Bitcoin. I really appreciate your market commentary. It's thoughtful and thorough. I really like the follow-through when you make statements that explain why you are saying that. See, there you go. Yeah, you can disagree with me. He's not some typical coiner that's going to say, oh, you're so wrong, You're laughably misinformed. I like that. Given Deepseek model can operate without the need for large data sets, will that change your view on growth prospects of data centers, copper utilities? I think we have to start that statement with the biggest word in the English language. If. That's a big word. If it is true that it can perform at that level, if it was built in such a way that it can perform at that level, if the paper didn't lie, if it's true, then I think you have to sort of rethink things a little. However, the opposite side of that is this. Let's say, I'm going to make a big dollar sign and a little dollar sign. Let's say it's wrong and you need big dollar signs. That means that it is large companies with the cash to get it done. But let's say it's small dollar sign. Let's say it is true. That opens up to many more smaller companies that otherwise couldn't afford it. So perhaps a few, a smaller sample of really big ones could end up being less demand overall than a whole bunch of smaller ones, right? So it's not as if the demand for power would just drop. It would be the demand for the product would increase significantly and may actually increase overall all the power that's being used because now it's accessible to everyone. It could end up being something like that. So I think it's too soon for me to change my mind on any of that. Maybe a quick breakdown of deep value investing. So Deep Value is a company that is got positive cash flow. So let's take GM a year ago. Great strong cash flows, good strong free cash flow, but for a while it was trading at like 3.5 times free cash flow because the belief was that it's never going to make the transition to EV. EV is going to be the future and GM is dead in the water. It's just a matter of time, but it's walking dead. That's deep value. At 3.5 times cash flow. That is deep value. Deep enough that GM did a $10 billion accelerated buyback, which was 25% of its market cap. Actually, I think it was like 33% of its market cap at the time that it did it. And then followed it with another, I think it was $5 or $6 billion buyback. And they still want to lower their share count to under 1 billion from 1.1 billion. Look at another 200 million that need to be bought back. Somewhere around there. So deep value is scary because it could be what's called a value trap. So you could go in there and say, well, this is really out of favor. Everyone's counting it out, but it's got such great cash flow right now. It's actually doing pretty good. Fundamentally, it's doing good. But the belief is that it's just a matter of time. The writing's on the wall. Give it a couple of years, and it'll be, less of what it used to be. So that's a good example. Are there still deep value opportunities in the market? Well, yeah, I think there always are, but you have to be careful, right? You better have experience at this, and you better understand the industry. I can remember back in 2005, 2004, 2005, there was a belief that Circuit City and Blockbuster were deep value. That Blockbuster wasn't going to go away. It was deep value. And I think there was even a plan to merge Circuit City with Blockbuster. And you put the Blockbusters inside the Circuit City, which would drive the traffic into the store, which then could buy the electronics that were there. And it's like, I don't want to get crude or rude, but you know what I'm thinking, right? Two pigs, right? It just didn't make any sense. They were both losers. They were both going to go away, but that is the trap with deep value, is that you think that there is still something there that can be saved. 2025 California wildfires look to have damaged a similar number of structures as the one in 2020, which I remembered resulted in finished timber prices exploding, limited kiln drying capacity. I got no idea how to play this, or even if it can be done. Prices haven't seemed to budge much on timber REITs and on companies with kiln drying in their portfolio. Well, there was a lot more going on in 2020 than just fires, right? There was a lot more going on that squeezed timber prices at that time. I don't know what device that was. I have no device around me that could be doing that. But sorry about that. But I'm sure it'll do it again. I'm looking around. I don't see my phones here. There was a lot more going on in 2020. I had work done on my house, and you paid the highest price. There was no negotiating on price. You want it done. That's it. Here are the prices. And I think we waited a long time for a door and a window. A long time, because there just weren't any. So there's a lot more going on. I think the problem or the issue now would be you're certainly not going to rebuild with wood framing. It's probably going to be concrete framing. And the permitting in California is a nightmare to begin with. So it's going to be probably years before it gets rebuilt. And then you have to think about rebuilding it. Who's going to insure it at this point in time? So you're going to have to rebuild it with something other than wood, which would be concrete. Considering Deepseek and the recent pullback in AI stocks, do you expect more weakness to follow? I don't know. I don't know enough about this, about AI models, and about how to assess whether this is real or not. You're hearing more and more about, well, it's suspicious. That doesn't seem to make sense. They're probably not telling you the truth because they can't say that they have a certain type of chip because of export controls, so more and more there's some skepticism coming in. I don't know enough to evaluate this. I would think that some infrastructure is still needed, but the amount out there could now be sufficient. Where do you think energy will go, considering the expected Deepseek effects on data centers? Again, I think it's too soon to tell what that effect is going to be. And, I don't really know much about this stuff. So I'm just going to give you sort of like a little analogy that maybe it's something like this. It could be that the way it was built like this, where it'll top out at a certain level of ability, but it might find it harder to go higher. Whereas other models are built like this, where they can continue going up because they spent a lot of time in foundational work. Whereas this probably didn't spend the same time in foundational work. So it may already have peaked at the level where the others are not there or a little below because they spent so much time on the foundation. So think about building two houses. One person throws together a basic foundation, doesn't put any steel in the foundation, by the way, lays the footings, builds the wall, and starts constructing the house. right? There's your house, however you want to look at it. And the person next door, dug down and built the 6-foot pillars underneath. I have that when I extended my house. I put these big 6-foot concrete pillars underneath so I could build up from it. And you spend a lot of time and a lot of money getting this done, and you build your house and you get to the second floor, and this guy is building for 30 cents on the dollar, right? He's got 300,000 in, and you got $1 million in, and you think, oh, what's he doing that's doing so well? But if they try putting a third floor on here, the foundation's not going to hold it. Meanwhile, you can go third floor, you can go fourth floor, you can go fifth floor because you did the foundational work. Maybe it didn't do the foundational work. See, again, I don't know if that makes any sense because I don't understand how these things are built. But maybe somebody could comment on that and say, oh no, that doesn't really apply here, or whether or not that makes sense or not. That you could get to this point with shortcuts, but you're not going to get much further, I guess is sort of what I'm getting at. I don't know. I'm not really making any big decisions on this one. I saw Nvidia this morning a little bit weak, 119, 118. I thought, you wanted to sell puts, implied volatility was up, you wanted to, the premiums were nice, and I thought, I don't know enough. I would just be gambling. I just don't know enough. I'll sell puts on gold, and that worked out nicely. What about Trump threatening to purge IRS? How would this affect the bond market? I don't know that it would. I don't know that it would, unless you tell me what mechanism you have in mind for how it affects the bond market. I'm trying to make the connection myself, and I'm not getting there. Thoughts on agency spread between 30-year fixed, 10 is closing. Agency hedged the treasury risk, so why isn't the stock price responding to the spread contraction? They have low right now. They have they have a low level of leverage, and it's just a matter of, I don't think that there are too many people making duration or spread changes or spread bets right now, especially with housing. You don't have a very strong mortgage market. So I think it's just a general, out of favor on that. I don't know that agency is going to respond well until the 10-year really starts coming down in a way where the market thinks, okay, now it's down. It's coming down. It's coming down. Not just, coming down to 440 just to go back up to 480, right? But that it is convincingly coming down. I don't know that it's going to really get much elevation on that. Outside money managers you use, do you give them complete discretion? I do. I do. Well, complete discretion. No guidelines in the sense like, don't do this, don't do that. But you do have benchmarks, right? So you have different sleeves. You have an international exposure. You have a growth component. You have a low volatility component, and then you have benchmarks, and all of them add up with the weightings to some expected return that you expect to get over multiple periods of time. That is, you're not going to get it every year, but over 4 or 5 years, you would expect that that's the return that you would average. So that's in the IPS. But as far as saying don't invest in these companies, invest in these, don't touch these, no, full discretion. I don't even know what I own, to be honest with you. I don't even look at it. Rationale behind being pegged currency rates. When you say the rationale behind pegged currency rates, it's well, some countries do that. For example, Panama pegs its currency to the U.S. dollar to the point where there is no point in getting Panamanian currency. You just use U.S. dollars. It's the same with Costa Rica. They don't have a freely floating exchange rate. They peg it to the U.S. dollar, and then they move it up or down depending on how many U.S. dollars they want to collect that week. So it changes based on what the central bank wants it to be. So you can just go to that country and no need for the local currency, just use U.S. dollars. Some countries peg their currency to a big currency like the U.S. For well, there could be all sorts of reasons. Could be especially if you do a lot of business in that currency. So Saudi Arabia, because it trades oil and oil trades in U.S. dollars, and they've done that for a very long time, probably don't want to take a lot of currency risk when your holdings in when your main source of revenue for the country is denominated in U.S. dollars. You're probably motivated to make sure that your currency stays fixed to the U.S. dollar. A few questions. What do you think of George Soros' Reflexivity? I read this years ago, and I remember reading it saying, well, I mean, it seems obvious to me. You're saying something that seems obvious to me. So I didn't think much of it. A lot of what you say seems very inspired by his theory. I don't know that I'm inspired by his theory, or the way I see things is just so happens the way he saw them, and he wrote, hey, look, markets are like this. And I remember reading it years ago, it's like 20 years ago. I remember reading it and thinking, well, yeah. I mean, I didn't need to read this, yeah. It didn't seem that revolutionary to me. It didn't seem that groundbreaking. You read it and you think, well, you're stating something that seems rather obvious. Do FX CFDs have carry as well? Or is it only the spot currency trades that would have carry? Well, it's a contract for differences, right? So, and you are paid in your own currency. That one I don't know. That's a good question. I would think not. I would probably think not. You said in your last Q&A that you think debt as a percent of GDP is a better metric to have a limit on rather than an absolute number. But if that was the case, wouldn't there be some sort of circularity? As in, government borrows more, government spends more and more GDP, government can borrow more. Every system can be gamed. There is no perfect system. There are good systems, and then there are all the others, right? So, in referring to capitalism, I think it was Churchill. Capitalism is the worst system that ever was, except for all the others, right? Everything has some sort of trade-off in there. Every system you have, somebody will figure out how to game it somewhere. So yeah, everything can be gamed, and when you have politicians motivated to get reelected, they will find a way to give money away to people. You get money, and you get money if I get reelected, and you get money, and you get money. That is the lowest form of politicking, is just to buy yourself into office. But it is the most populist form, right? Is I'm going to vote for the person who's going to give me more. And when you have capitalism where it follows power laws, you do have a lot more people who say, yeah, give me more. I'll take more. So, if you're going to try to design some system, you have to think about, well, how can it be gamed? The easiest thing to do is to pass a law that says you need a balanced operational budget, right? If you have capital expenditures, then sure, you can go ahead and use debt financing for CapEx, because that would add to the productivity of the economy. But if you're just paying salaries and wages and transfer payments, wealth redistribution, if that's all you're doing, then no, you can't run a deficit for that. But that'll be gamed too. Everything can be gamed. Recent episode of All In Podcast, my opinion, the quality of the show has declined significantly. It has. Feels like more of a political celebration of Trump's win than a balanced discussion. True, some of Chamath's comments, particularly about the nationalization of TikTok and his defense of the January 6 pardons, Did he defend them? Came across as biased and misleading. I started watching it, but it was like 15 or 20 minutes of self-congratulations about how important their podcast is, how popular their podcast is, how important they are, how well dressed they are. And I thought, okay, well, if you're not going to talk about stuff that I know nothing about, like the venture capital space, what am I listening for? Right. So I think the last 3-4 weeks I've not gotten through a whole episode before I say, okay, well, I'm just no longer interested. Something is lost without Sachs there. This rotating seat of different people it could be interesting, but the dynamic seems to be lost. And it is a lot of patting themselves on the back and self-congratulations, and a lot more about how wonderful Trump is. I agree. What's your take on this? I did answer that. I got addicted to your content. Recently, I watched your video about portfolio management for retail investors. You're talking about REITs in that video and how you're applying volatility using options. Can you explain why Canadian REIT prices are such low levels right now? Well, the belief is the biggest driver of apartment rents is population growth. By far is the biggest driver is rising employment and a rising population, because they got to live somewhere, right? More people who are getting work can afford to pay, can afford to move out on their own. And Canada right now has an issue with its economy. If we get tariffs, it's going to hurt really bad. And after years of bringing way too many people into the country, Liberals, seeing that they weren't going to win, have decided to change course and say, okay, well, now nobody. Well, actually, they lowered it significantly, so to the point where you'll have almost zero population growth for the next 2 years. So you remove population growth as a big driver, and you add the specter of a recession with job losses. Yeah, that can kind of hurt. Not to mention the sheer overcapacity of condos in markets like Toronto. But condos rent at a much higher price than the average monthly rent of these REITs. Why it's so low? I think it's a mistake. I think the market's mistake is my opportunity. I don't mind waiting 2-3 months for them to move up. They all have they're at these prices. Their dividend yields are over 4%. I'll take it. I'll sit in that. We're gonna get another rate cut from Bank of Canada. I'm doing this on a Tuesday night. It's 9:31 p.m. At this point. So when I say there'll be a rate cut tomorrow, I most likely won't have this video up till later tonight or early tomorrow. I don't know there'll be a rate cut. It's 12 hours away before we find out, but more than likely. And why REITs like CapREIT have their price to book at 0.71. I agree. I think it's a buying opportunity, but you need patience, right? So for me, the Canadian REITs are a long-term hold. The Canadian banks, long-term hold. I'm okay holding those for income. Thought after Bank Canada started reducing rates, the prices would go up. Is it a new price level for REITs? Or should the prices recover after rates go down even more? I think you're going to have to get past the tariffs first. If there is no threat to jobs, no threat to the economy from tariffs, I think you'll get some kind of price recovery from that. But that's sort of a big headwind. In your opinion, are REITs good for regular long-term investor? Long-term, yes. Yeah. I think they are. I put bids out for more today. I got like 600 shares of Minto filled. That was it. I had bids out for 4 of them, and I only got like 600 filled, which is, not really the amount I wanted. But okay, I'll wait for tomorrow. Maybe I'll have another chance tomorrow. Interested in your insights on the relationship between REIT prices and housing prices. If one is trying to save for first home purchase, does it make sense to invest in REITs? Oh, I see. So that in case housing prices really run up, REITs would run up? I'm going to say no. Not really, because commercial real estate is priced on its ability to generate funds from operations, whereas housing is priced on its availability. It would be, yeah. No, I don't know that REITs are a hedge against housing prices. So no, I wouldn't. Well, I don't think I don't think at these valuations for Canadian REITs, I don't think you can go wrong. I think the downside at this point is quite minimal. At this point, so I imagine so. Just stick to total market indices. Problem with total market indices is you're saving for your first home purchase. If you think that's going to happen in 2 years, you need the market to be at the same level or higher in 2 years. Otherwise, you're going to have to take a loss. TLT is a portfolio that needs to maintain a certain average maturity. At what point does the dollar amount of distributions begin to drop if the yields from long end of the curve start to fall? Oh, it would take a while. Because they have a certain portfolio with a certain yield right now, that if they sell bonds that are getting too young to buy bonds that are longer dated to maintain their duration target, just the incremental amount would have a slightly lower coupon, right? That is if rates are going down. Then the bond they had would have a slightly lower coupon, but the bond they sold would have increased in price. So you'd get a cap gain on one while you're getting a lower interest rate on the other. Let me clear that up. So it would take, I think, a couple of years for all of that stuff to work its way through. Broker requires the same amount of margin to short MicroStrategy as it does to short MSTU, 2x leveraged ETF. Shouldn't they require twice the margin? Well, no, I don't think that they'd want twice the margin. You're going to have the same margin, and you have mark to market on that daily, because it's 100% of the short proceeds plus 30% margin. If it's moving up a lot, you're going to have to post more margin. If it comes down a lot, you'll get more mark to market. So it's the variance margin that would be highly volatile. I don't know that you'd need more margin. You would just you'd need more liquidity for that variance margin. The reason why you wouldn't have more margin is because it's publicly traded, it's liquid, which means the broker can liquidate it at any time if you don't meet the margin. Can liquidate at any time, right? Question about valuing a company using free cash flow to equity or the firm. Why does neither approach consider the amount of cash on the balance sheet? Well, if you're calculating enterprise value, it does. So if you're just looking at free cash flow to the firm, what you are pricing out is the operations of the company, right? Usually once you price, if you're looking at free cash flow to equity, you've already considered the debt. Usually you'd strip out cash, right? You've calculated the value of the operations of the business, and you say, well, it's worth this much. And you'd strip out cash if you were going to buy it at whatever price you came up with. That's very typical for, if your business is being bought, it's very typical that you're stripping out cash. So if you had a cash balance of, 5 billion, you're typically stripping that out, right? So enterprise value would probably be a better metric to use. But one of the things that free cash flow really doesn't pick up is the value of the assets being misstated on the balance sheet, and that is very common for U.S. GAAP. So if you take Costco, it has a whole bunch. It owns 861 of its 990 properties, and if the city, it tends to, when it sets up new locations, a city may look like this. It will set up over here, right? Because land is really cheap over here, and it becomes a destination. But what happens is, other retailers set up around here, and then another division builds up around here. We have a bunch of houses, and then it builds up around the Costco, so the property value really accelerates. But Costco lists it at historical cost, and for the building at accumulated depreciation. So they got a whole bunch of properties in California that are 40 years old that are being carried at what they paid for the land 40 years ago. That land is worth tens of millions more. So if you value Costco as a multiple of some fundamental cash flow, whether it be earnings, whether it be free cash flow, you would still conclude that, whoa, Costco's way overvalued. You would have to adjust the market cap of Costco by about $100 billion just to account for the fact that its balance sheet is carrying assets that are not reflecting the proper price. So you'd have to adjust it for that, which is very common, because when you're using a multiple of some fundamental cash flow, you're valuing the going concern part of the business. I mean, it may be sitting on billions in assets. A multiple of free cash flow is not going to pick that up, right? So if you are valuing the business, you would know to go further. You would know, well, I got to go further. So if you say, well, free cash flow is $2 billion, it should trade at 10 times free cash flow, it's $20 billion, but it's trading in the market for $40 billion. Why? Is it overvalued? You'd go to the balance sheet and you say, oh, hang on, there are these assets over here that are not reflective of their true value. These are much higher. And you can say, well, if these were traded, they'd probably be worth about $20 billion. Hence, the $20 billion for the operations is probably right. And then you have these other assets. So it's the valuation is just your number you come up with. Then you look at the market value, and then you say, well, why is it different? And then you would find that there is some difference in, maybe there's no difference in the assets, but you certainly would look to the assets as a culprit. How frequently do you plan to offer investment seminars at your home in Costa Rica? I don't know. I have 3 weeks coming up, February 23rd to March 15th. I don't know. Big question mark. We'll see how those go. I think they'll go well. I've got some agendas already planned out of what we're going to go through. Hopefully the market will cooperate and we'll have an exciting market or an interesting market, right? If not, then, well, it could be boring in terms of the trading, but interesting in terms of other things. I don't know. Not often. Not often. There are only there are good times to be there, which is anywhere from mid-November to mid-April. July and August are summer months in North America and Northern Europe, but they're winter months in Costa Rica. It rains every day. Every day. So when you live there, and you wake up and rain. You go to bed, rain. You wake up, rain. Go to bed, rain. Go out for a drive, rain. After 4, 5, 6 weeks of that, you're like, oh, I can't take this anymore. Like, if it could just stop raining for a bit, and it does, you go out for a walk and it rains. It doesn't become a destination anymore, right? So I got to think about that. What things would you looking for when diversifying away from U.S. markets? How do you view the U.S. premium versus global market? I have started looking around, but almost everything is uninvestable. You get an end to Russia, Ukraine, Europe is investable again. Germany's investable again, right? But you need that to happen first. Australia, well, not unless China really starts to accelerate its growth. India, I think, is with the exchange rate, even though the market may be valued high, with the rupee so low, if you're using US dollars, it does actually become a cheap market. Trump is just a wild card at this point. It's like, he gets off on the idea that he is chaos, but chaos adds a cost to everything. Right? It just adds a risk premium to everything. So he is affecting the wealth of a lot of people in a negative way, and a lot of funds in a negative way because of his chaotic approach to things. Like, are you going to do tariffs? Or are you not going to do tariffs? I mean, at some country at some point is going to call his bluff, and he's going to have to do it. And if Canada calls his bluff and says, "Go ahead, we'll just hit you back," both countries will suffer. And especially if Canada holds back energy, a lot of northern states will suffer. Mexico is already considering a bunch of tariffs as well, but targeting Republican states. That's where you hit them. You target their own people, and you hurt businesses in their own state. The areas where Republicans won. If Canada calls their bluff, they kind of have to do it. You have to do it now, otherwise it's over. You see, I've made this case before that it's okay to walk around with a baseball bat and threaten people, but at some point you're going to have to use that baseball bat to make your point. Otherwise, it's just a lot of empty talk. You're going to have to use that baseball bat on someone. So there is walking into a room with a baseball bat to threaten people, but if you're not prepared to hit anybody with that baseball bat, well, it's going to be somebody will call your bluff, and as soon as they realize that you're not going to hit anyone with it, well, then it has no value anymore. Will he? I mean, he did threaten Colombia. Colombia backed off very quickly, but that's Colombia. That's no big deal. Canada's a big deal. I don't know. But it is that chaos premium and that uncertainty that holds everything back. It's like, well, let's wait for tomorrow, see what happens. But then it's going to be something else, and then it's going to be something else. I'm okay with the volatility. If you're going to give me chaos, at least I get volatility. I can make money off volatility. I don't have to go find another market. Very open question. Curious to hear your thoughts on U.S. increasingly become overpriced. It is, in historical terms. Do you think this premium is here to stay for long? They usually never are. Usually not. Same with U.S. dollar strength. It usually doesn't hold this long before it actually starts working against you. Some of us don't have the life experience you have. So there is historical time you remember feeling similar to now with respect to U.S. dominance continuing to storm the world. This would have been the late 90s. It would have been most of the 80s too, under Reagan, especially the later 80s. And when communism fell, and that U.S. had won the Cold War, it was like the height of U.S. strength. And the late 90s were pretty much the same thing. The center of innovation was Silicon Valley at that time. The dot-com explosion was really a U.S. thing. You could say that the U.S. is almost responsible for the commercialization of the internet in the way that we know it today. There were times like that, but this has always been the case with the U.S. and just for everyone out there who thinks that socialism is going to be wonderful, why is it that the U.S. is like that? Not because it has the most labor in the world. It's because it has the most capital in the world. End of story. End of story. It has the most capital, and that's why it is successful at those sorts of things. Can you explain to us how the 100% downside protection Bitcoin ETF works? This is the same as any kind of guaranteed structured product with upside. Is, let's say that I'm just going to give you an example of a 5-year guaranteed investment that's tied to the equity market. Here's your timeline. Here's 5 years, and here you are now. And what we're going to do is say you're going to invest 1,000. So I'm going to guarantee you 1,000 in 5 years, but I'm going to put it in a very safe investment. I'm going to put it in a 5-year government bond. And maybe this has a 4% yield, so I'll discount back the 1,000 by 4% to figure out how much money I need today, and I might need 920. I'm just making that number up. So I got $80 left. I'm going to go buy calls on the equity market. So if the equity market goes up, there you go. There is your equity return on top of your guaranteed 1,000. So it is just a structured product that is a combination of a government security along with an upside call. How Deepseek impacted your NVIDIA trade? NVIDIA had a significant rally before this came out, so that the premiums were so low. Why wait till February 20th? The premiums were so low. Usually when they're that low, when you're like, all you have left is 20% of the original premium, but you have like 30 days before expiration. It's like, okay, I'm going to close them. No point keeping them open. So I closed them. It is said that China obtains these chips from the black market, reportedly through Singapore. To avoid detection, it is mentioned that they might be using H800. Well, that is the suspicion that's creeping in, right? In your response, let me just grab a drink of water here. In response to your recent videos regarding what's wrong with CFA land, I'd love to hear your retorts regarding some of the reasons. Yeah, if you listen to the live feed I did that night, I did offer some pushback on this. People think AI takes away from the charter's value. Do you disagree? For that, I suggested watching the most recent Marcus Academy podcast with an AI researcher, and what he did was he created a model, and it had this was ability on the x-axis, and this is the wage, and drew a 45-degree line saying the more ability you have, the higher the wage you have, and we'll see where you land on the 45-degree line. And if we're talking about, there's some cutoff over here over which you need supervisors, because the ability that you have, all agents were assigned an ability at random across the x-axis. So maybe they were over here, maybe they were over here. If you were over here, you were a supervisor, right? And it showed that the wage looked like this. If we went like this, right? That the higher the ability, the more you would make. The slope of the line is very, very different. And then it substituted AI agents in, and that could operate on this particular line. And what it did was it did this. I'm trying to draw it out like this, all the way to here, and then this went way up. So what it was saying is that at low levels of ability, AI will replace the worker. At a lower wage, it will replace the worker. At high levels of ability, it will augment the worker. So this is considered a co-pilot, because it can fly the plane without you, and this is a co-worker. That AI becomes a co-worker. It doesn't replace you, it becomes a co-worker, whereas here it does replace you. It was an interesting presentation. So in terms of CFA, if all you can do is the repetitive stuff, then AI will replace you, if that's all you can do. But the designation is meant to elevate you such that you can move on to more abstract thinking. If you don't make that leap to more abstract thinking, then yeah, AI can hurt you. But if you do, AI can help you. AI makes you more productive, makes you more valuable. It actually benefits high ability workers, and it hurts low ability workers. What are your thoughts regarding Yield Max ETF? Yield Max ETF as a whole, such as, I've never heard of those. Notice them growing in popularity online with their massive dividend yields. Are the dividends just okay? I don't know anything about them, so I'll just pass on that. If your applied level may be considered level 4, do you envisage further development such as 5 or 6? 5 or 6? some point you got to stop it. This isn't a black belt. You get to what is it? White, yellow, green, white, yellow, orange, green, blue, brown, senior brown, black. If I can remember correctly, it isn't like that. And then first Dan, second Dan, third Dan, and on up. L5 could be real life education with as an instructor. L6 might be face-to-face camp with a group of students. Well, we are doing that. I am doing that in Costa Rica. I have extended invitations to a number of people over 3 weeks. Each group is there for 1 week, and I'm doing it for 3 weeks, but we are going to do it in sunny, swimmy Costa Rica. Please explain what calibration means in the binomial model. That's a pretty specific question. How do we know if rates are calibrated or not? You'll start with your first branch, right? And you'll take a bond with no optionality in it, and you'll price it. These are forward rates. These are 2 forward rates, and it's your best guess as to what the forward rates are. And what you do is you discount it back to recover the price. And if you don't have the price, then you have to change these rates. And there's a relationship about the distance between these two. There is a relationship based on whatever volatility is or whatever your assumption is. So it's not as if you could just change one. You have to change them in a way such that you preserve the relationship. So it's an iterative. It's an iterative process, which means you're using a goal-seek function. And once you recover the rates, then you know that these 2 rates are correct. Then you do the next part of the tree. And then you have a bond with no optionality in it, and you have a price. You know that these are right, and you try to recover the price. You don't? Well, then you change these, and the relationship between these is fixed. So they should all move in the same way. Once you do the goal seek, once it recovers the price, then these are good. That is what is called calibration. And you do it by backwards induction. Your opinion of industrial REITs? If we have greater clarity on tariffs, if there's that little word that means a lot, potentially increasing onshoring, would this be a good time to step into the larger players? I have been looking at industrial REITs. Yep. What are your thoughts on Mark Carney versus Pierre? Well, Mark Carney is Justin Trudeau 2.0. Right? I don't know why. I've said this before. I don't know why he wants that job. He's going to lose after, Governor of the Bank of Canada, Governor of the Bank of England, 2 central banks behind you. Why would you ruin your reputation by coming in behind a guy that's completely ruined everything? You're going to be Trudeau 2.0. You're going to be painted as that. You cannot win. And I don't know why he wants that job. What will it take for CEI to start matching LEI? I don't know. I've just given up on LEI. Macro just has not worked well for 2 years, 3 years, 4 years. What's the point of looking at it? I don't even follow LEI anymore because it's not useful anymore, I think. Let's say we have Treasury ETF effective duration of 5, yield to maturity of 5. Is it accurate to say if the level of the yield curve rises 1%, I would have 0 return? Negative 5 times 1%, 5. You're adding in the yield to maturity on a 5-year. How long is the bond? Well, it has a duration of 5, so that's, if it's a coupon paying bond, you're probably looking at a 6-year bond maybe. Well, it depends on what you're doing with the coupon, right? Are you when you get the coupon, are you keeping it at zero duration, or are you reinvesting into the portfolio and adding duration? In other words, is the value of the coupon being reinvested and it also having a duration of 5 and changing? So it's, theoretically, with a duration of 5, you're going to lose on a 100 basis point change if it rises by 1%. Theoretically, you're going to lose 5% on the price. You're not going to lose anything if you hold it to maturity. But looking at the price, you'd lose 5%. So if you got 5% at the end of the year on the coupon, your portfolio value would be the same, sure. Comment on rising credit card debt. Given the high interest rate backdrop and post-COVID leniency in underwriting standards for credit card issuances, I don't know if that's true. Was there post-COVID leniency? My understanding is that most of the, if you look at the Federal Reserve of New York publishes this information on consumer credit. And I can remember looking at it a few times. The credit scores are significantly higher than what they were in like 2007, 2008 in credit, in auto, in mortgages. So I don't know that there was leniency in underwriting standards, so I don't know that I can take that statement. Consumers are growingly only making the minimum payments. Delinquencies are rising. So at what point does this show up in consumer discretionary stocks? My understanding is that delinquencies are rising to pre-pandemic levels, to what would be a normal level. So no, I guess I'm not on board with this with the comment. There is a growing trend right now. I just read this in Wall Street Journal. I think it was yesterday. A growing trend of not spending that's taking over. That normally, TikTok and social media, you get on there and you show all the wonderful things you buy. There's this trend of getting on there and bragging about things you didn't buy. I didn't spend this, and look how much money I got. And there's stories of people paying off their, one story was somebody owed $49,000 on their credit card, and in 1 year of doing this, they paid off $35,000. All these stories of how much people spent on ridiculous, useless stuff, right? And now that becomes addicting, and this sort of thing is spreading. So I don't know that I would say that there is a trend of making the minimum payments when I see something like this, although I don't know how big that is, of how that is catching on. I don't know if any of those statements are true. I haven't seen that in the consumer credit reports from Bank of New York, the Federal Reserve of New York. A few points that add to the Deepseek. Cost to evaluate, train a model is one thing. Costs, computing power required to operate the model seem to be overlooked at the moment. Is an OpenAI currently unprofitable? I don't know any answers to this. I believe the CapEx for hyperscalers are already locked for 2025. What does it mean for 26 and beyond? I don't know. I think I can skip the other three because I'm not going to be able to answer any questions about this. At this point in time, I can tell you that I have no idea where this is going to go. I don't know if this is a thing or not a thing. I don't know if it's true, if it's not true. I just don't know. When I came across it, all I thought was that this seemed like it should be more than what it was. Now I'm feeling like it's way more than what it should be. I don't know the answers to the questions. I think you're a multimillionaire, but you actively trade normal financial securities. Is there a reason you aren't involved in VC or PE, where high net worth individuals usually invest? Well, Warren Buffett doesn't. I mean, he does this, and he's way richer than I am, or wealthier, I should say. Whether he's rich is a different question, right? But he's wealthier. I believe I have VC investments. Oh no, sorry, hedge fund investments. I'm hedge fund, which are private investments, but I do have some funds. I don't know what they are. I think there's 3 of them. I do have private credit in a private REIT, a debenture and private REIT. I don't know what else I got. I might have some PE. I don't know. Currently using your website to prepare for L2. Is wondering if you can offer an addition to access the next level's curriculum during the period while we are waiting for the results. Okay, so I don't own the CFA side anymore. That is Serify. I used to have that where once you pass the exam, I would put a video saying, okay, well, take a section from the next level. And if you don't pass, oh well, it's only one section. If you do pass, you got one section behind you. And I called it the no risk, low risk strategy. They might still have that. I don't know. Trump wants a short end of the yield curve to drop quicker and significantly. Won't that put upward pressure on the long end of the curve? Yeah, it's he wants rates to come down, but it's what the market cares about on the long end. That's the more important thing. And that I don't know that the market would be willing to go along. But I am long on both sides. So if we think about the yield curve right now, we have slight upward slope. Fed funds futures is here. So I am long TLT, hoping that the long end drops, and I am long ZQ, which are Fed funds futures, hoping that yields drop. So I don't care where they drop. I'll win on one of them. What do you think about the OAS on USIG and high yield? Tight. Where were they last Friday? Let's have a look at Triple C, 6.9 as of last Thursday. Triple C was 690 basis points, under 7. You have investment grade at 80 basis points. You have high yield at 261 basis points. That is low. Nothing to see here. No fear, right? Potential mean reversion on OAS sometime in the near future. So you're asking me for 2 things at the same time. You're asking, do I see mean reversion and in the near future? I don't have any idea what's going to happen in the near future. No one does. At some point in time, sure. In the near future, not a clue. I have some allocation LQD and HYG, but I'm thinking about reallocating a lot of it to TLT. Consumer credit report does support low spreads. Delinquencies, foreclosures, and household debt to GDP ratio are near 20-year lows. So that is in contrast to the comment earlier, which said they are rising, which I was rather skeptical on as well, based on the consumer credit report. That doesn't back up those statements. Yeah, it does support tight yields until the economy doesn't. Don't know when that's going to happen. Successful quant computing attack on a cryptocurrency inevitable. Inevitable? I don't know if I'd say inevitable. I'd say putting a probability on it. Is there somebody somewhere or a group of somebody somewhere thinking about it and trying to figure out how? Yeah, probably. Wouldn't that render most cryptos worthless? Most cryptos are worthless. You don't need a hack to make them worthless. Most of them are worthless. They have no value at all. I'd say 99.9% of them are just nonsense. Fartcoin, Trump, Melania. I mean, come on. I mean, All it is it is a tax on stupidity. That's all this is some people come along and say, you know what we can do? We can really tax the stupid people. Let's give them fart coin. Let's make it overtly stupid and watch what happens. It's just a tax on stupidity. They are worthless, right? Let's say we have two bonds with the same maturity and coupon, except one is treasury, one is a straight corporate bond. Interest rates fall by 1%. Does duration affect both bonds the same? Yep. Or closer to the same if we hold the credit spread on the corporate constant? Yep. Exactly the same. Is credit duration a thing? Yes, it is. Credit duration just says by what percentage would the price of the bond change if the credit spread changed. That's all it is. Are we talking the duration of the bond and multiplying it by the change in the credit spread? Yep. Do we need to separate this if we think benchmark rates will rise? Yep, you do. So you would use, let's say you just use modified duration. And you would say the bond will have a modified duration, which includes both the credit spread and the interest component, because modified duration is a change in the bond's own yield. So what you'd say, well, credit spreads are going to drop 30 basis points, but interest rates are going to rise 20 basis points on that particular yield. The end result is you have a drop of 10 basis points. There you go. Combine that with the modified duration. The yield will change by 10, so they can offset, sure. General process for keeping up to date with news. It's hard to distill that down into a simple thing. It's all day long. It's not one particular thing. It's, in the morning, it's pretty much Barron's and Wall Street Journal. And then there's Bloomberg. Bloomberg covers a lot of the headlines anyways. So if you watch Bloomberg for 2 hours, you go to Wall Street Journal and Barron's, it's like, well, I've already heard this. It just gives a little bit more detail. And then it's companies. You got to be aware of what your companies are doing. It isn't critical. Like, we think that, you got to be aware of it every morning. 2 hours in the morning, it's, I do maybe half an hour in the morning. I shouldn't say that because I have Bloomberg on all day long. So even though you're not really staring at it, it's on in the background. You hear it. I don't watch price. And it's rare that the news every morning will cause you to do something where, I got to do this. I got to do that. I got to do this. It's rare that it will do that. You will become better investors if you simply go about your life and don't watch the screen. It's again, there's very little news that comes out in the day that will force you to do something in your portfolio. Very rarely do I read something and say, "Oh shit, I better do this." Very rarely. It's usually a company event in which I have to respond to. It's more of sometimes there's a story about a particular company that helps you explain why that company's price might be moving. It might be moving on this story, right? But I don't know that there's been much that I've read that I then have to react to. If I'm reading it in Wall Street Journal, it's already in the price. It's already happened. It's already in the price. View on Trump in general. That's a difficult one. I think he wants to be, first of all, he is a raging narcissist who is vindictive, right? If you don't say nice things about him, he'll remember you. I'm sure on his list of names, he's got that kid on the schoolyard when he was 5 who took his building blocks from him. He just hasn't gotten even with him yet, but I'm sure it's on his list. He is a mean, petty, vindictive little man who wants to be Caesar and who has power, which is the worst. I said if you wanted to have a Game of Thrones character that matched him, it would be Joffrey. So what do I think of Trump? I think it's King Joffrey, right? That's exactly what he's like, mean and vindictive. While studying for the CFA exam, I remember some of the exercises in your sites having funny references on them. Remember, you make some comments sometimes in your videos. Some comments, yeah. We all know he's a showman, but is he doing something good after all or not? Well, because he cares about the economy, because he cares about the stock market, you can sort of say, well, we have a Trump put. If the market falls 200, 300 points because of something he said or did, he will backtrack it very quickly, right? So he floats stuff and he says stuff and he watches the market. So if we disagree with him, he doesn't care about the voters, he cares about the investors. The investors are the voters that are voting on all the public policy. And when he threatens to do something or does something, if the market crashes, he'll reverse it. So there is a Trump put on that. So in the sense that the investor class will come out ahead, yeah, he'll do well. But there's always the do the ends justify the means question. For Trump, winning is the only end. All means are on the table. All means are on the table. Nothing is off limits. Nothing is off limits. The ends justify any means, even destroying lives, as long as you win. As long as you win. That's it. That's all there is winning. Winning. There are no friends. It's winning. That's it. I sometimes think that winning might have too much of a cost. Like, there are certain things I will not do. Even though I know I could make a lot of money, I just won't do it. Right? I just won't. I can't tell you how many times every week I get these offers for promoting something. If you promote this, we'll pay you this. This for a 2-minute mention, we'll pay you this. We'll pay you that. And it's like, but I don't believe in any of this stuff. So the money that I would get, yeah, it's easy money to get. The money I would get would make me feel dirty, because it'd be like the means did not justify the end, because I don't believe it. Why would I tell other people to buy this shit? I don't believe it. I just don't think that just because you can win, that all means are open to you. But for Trump, it doesn't matter. Exploring ETFs in Canada. I know very little about the Canadian market here. I see some covering U.S. market are CAD hedged, whilst others aren't. The ones that aren't have performed better. I don't know. I know nothing about this stuff. I can only take your word for it. What are your thoughts on this? I don't know enough about it. It's not just a matter of one is U.S. that's hedged, the other one isn't. It's, well, what are they investing in? I mean, I don't know, right? So, nothing. Any opinions on a company called Open Door? Nope. No. Why do you always monitor reverse repo and reserve? Oh, I already answered that in the live session for the person who asked that. A good idea for Canada to merge with the U.S.? Well, ask this. Was it a good idea for the Eurozone to be created so that you have interest rate policies for the entire Eurozone? However, Italy and Spain and France could use different rates than Germany and, some other country. This is the problem when you have specific regional differences, is you have now one monetary policy. That may not work. No, I don't think it's a good idea to merge Canada with the U.S. I don't think it's a good idea at all. In my opinion, reducing beta through IWM isn't the play. Well, it has been. It was today. It has been for quite some time. I would not short SPY. I just suffered shorting SPY. But in shorting IWM, nope, not suffering one bit. Doing quite well. And the premium, the implied volatility on IWM is higher than SPY, so the premiums are better. No, it's been working for me, so I'm going to have to disagree on that. Ken Carson predicts yields going to 6%. Jamie Dimon predicted 7% in 2023. That never happened. Right? He was right about 4.5 not so long ago. Do you think 6 is a possibility? Well, anything is possible. The correct word here would be probability. Do you think 6% is a probability? I would put a very low probability on it getting to 6, because I think that a lot of people would step in before it got to 6 as an alternative to markets. I think on its way to 5, it would break markets. On its way to 550, it would really break markets. And I don't know that it would have a chance to get to 6 before somebody stepped in. And he declared a national emergency. Yeah, that's true. Deepseek. Can't really watch the video. Have some mock exams. Strong dollar might result in emerging market equities looking cheap. Foreign investors have constantly been selling out of India. Might be because they were trading at higher valuation to start with. How at a retail level one can perform valuation. I don't know that it's necessary to do deep dives, in the sense that what sell side would do. I usually look for a good story. I never do 5-year forecasts. I don't see the point of going through 2 weeks of a deep dive to give my best guess as to what's going to happen in 5 years, because I know that is all pure fantasy. I don't have time for fantasy. Give me a good story. Give me a good story so I know, hey, look, this is going to have a lot of tailwinds. Good enough. I'm good. I'm in. I'm good. And I'll position myself as information comes out. But no, I don't break out spreadsheets and do deep dives. I know how to do all that stuff, but I just don't do it because I find it to be a colossal waste of time, because at every point you're going, okay, well, what do I think is going to happen to this line? What do I think is going to happen here? What's going to happen? And after you do 15 assumptions, you think, well, I just made 15 guesses. What's the likelihood of those 15 guesses all being right? Maybe 2 of them will be somewhat right, and the rest I'll be way off. I mean, what's the point of this? It's pure fantasy. It's pure fantasy. So no, I don't do that kind of stuff. Building models from scratch, I don't think is feasible for every security. It is not. Often that leads to switching to a relative valuation, which isn't always efficient. Yeah, I look for a good company. Not a good company. A good story that is undervalued. Give me a good story that's undervalued. That's what I look for. Deepseek. Tax credit for automakers building and selling cleaner cars. Regulations on fossil fuels related to auto sales were for the purpose of incentivizing the legacy car companies to make the expensive transition into EVs. Well, it is true. Tesla is already EV and has already benefited from these programs. That is true, significantly. If these programs fall away, it will knock Tesla, but it will hurt the other automakers. No, it won't. Because they won't have to pay for credits. It won't cost them anything. It's not going to hurt them. You're making the assumption that it's going to be an EV future, period. And if you don't incentivize them to move, they're not going to move. So you're making a whole bunch of assumptions that GM is not going to move unless it's incentivized to move, and that you're absolutely certain it's going to be an EV future, and that it's going to hurt them more than it hurts Tesla. Almost every jurisdiction that has removed its taxpayer-funded support for EVs, EV sales have plummeted. Right, so I would tend to disagree with that. I would tend to disagree with that. These programs fall away and knock Tesla. I don't think the others would get hurt that much. I think Tesla would hurt more. Discord is going to be open to anybody. No, it is not. Last thing I would want to see in another place full of crazy Reddit people who don't know anything about what they're talking about. Yeah, like the person that I started the video with, screaming at other people to stay in their lane without having earned the right to be in the lane themselves. Yeah, we've all had enough of those people. No, they'll be highly vetted. At first, it'll be just the applied series, and then I will eventually open it up to more. And my thinking is that you would have another designation or a university degree at a minimum to be able to enter and to contribute. But no, it will not be open invite. Once the Discord server is up and running, this comment section moves to Discord. And when I put these videos up, there will be no comments. Comments will be closed. So either you'll either be in the Discord group where you can comment, or you won't. And that'll be it. And that'll be it. Is it gated to people who have actual credentials? Yep. Because that's the only way you get really good conversation. Right? I said this on the live on Sunday night, that imagine that you're in a hallway with a door on either side, and on one side it's 10 to 15 year industry veterans. There's 15 of them having a conversation about the markets. In the other one, it's just anybody can go in. It's just 15 people at random off the street with, no vetting, no nothing. Which room do you want to go in? Right? Which conversation do you want to hear? Now imagine that you had to pay $10 to get in. You'd pay $10 to hear those 15 veterans talking. When I say veterans, industry veterans, all fund managers. You'd pay to hear them talk. You wouldn't pay to hear just somebody off the street talk. Right? And if you had a choice, you wouldn't listen to them either. Now, that's what I envision the Discord server to be. We're in a unique position with our site because applied level is the majority, 95%, are in the CFA community, with a significant number of charter holders. And not only that, just our CFA candidate base is huge. And when you look at the email names they have, they're all well placed. We have people, I don't say we have people, but we've had people through our program represented at all the banks, all the big ones, all the funds. We probably have at least a population the size of Reddit in terms of all the subscribers that we have. I would love to see really high-end conversation. So yeah, it will be closed. I will let people in, but they won't have permission to engage in the conversation. Some people can come in, but they just can't engage in any conversation. They haven't earned the right to engage in the conversation. But they can certainly read it and listen to it, but they just can't engage in it. Right? I think that's important to have. NEP collapsing. Well, it's not NEP anymore, right? They're changing their name, but they suspended their dividend, which seemed to make sense. But man, did they took a drop on that. So I got out this morning at 12:04. I just said I'm done. I can make that. I can make it back somewhere else, but I wasn't going to continue riding it. I think it'll probably find its momentum down to $9 to $8. Maybe I'll re-enter at that point. But they're restructuring what they do and how they do it. Good, strong cash flows. But 2025 is a pretty much write-off year for them because they're actually guiding lower. And they're going to use most of the cash to take out some of the preferreds. So, I from quarter to quarter, I'm not going to expect much for the next year, so I'm out. And here we are with the laughably uninformed guy all over again, right? I hope he understands, he probably won't. Anyways, that's the end of it.